Great. Hey, good morning. Thank you for taking the time this morning to learn a little bit about Townsquare Media. My name is Bill Wilson. I'm the CEO. I'm here with my colleague Claire Yenike and Head of Investor Relations. I'm going to walk you through a 25-minute presentation, maybe a few minutes less, and then if anybody has any questions, happy to take them as well. What I would start with, just from a founding thesis of the company, is the company was founded in 2010, and the whole idea was to take a legacy traditional radio broadcasting business and transform it into a digital-first company. And I'm proud to say that hopefully during this presentation you will find that over the past decade we've made quite a bit of progress and had quite a bit of success in growing our digital businesses while having what I would consider a traditional cash cow broadcast business, which is stable in revenue, still growing in revenue, particularly coming off of COVID this year and into next year. But our true growth engine is our digital businesses, which I'm going to spend a lot of time talking about today. An important thing to know about Townsquare, and in my view a key differentiator, is we are really the only large at-scale local media company focused on markets outside the top 50 cities in the U.S. So we operate in no cities in the top 50, and our quintessential market is, say, 300,000 to 500,000 population. So we're able to bring our digital advertising products and our digital marketing services products, which I'll go into depth here, into these smaller towns and cities where we have an outsized competitive advantage based on our scale and sophistication. At the same time, in our view, and I think the data backs this up, operating in these smaller markets outside the top 50, the radio broadcast business is quite different. There's a lot of competition in New York and LA and Chicago and Miami for how people get informed. But in markets like Tyler, Texas, Casper, Wyoming, Lafayette, Louisiana, there's not a lot of places to turn to be informed and entertained, particularly with the demise of newspapers over the last 5 years, 10 years. So we've come in and actually filled that void. We're one of the largest producers of original local content in the United States. We produce 20,000 pieces of local content for our communities on a monthly basis. So I would think about us as a traditional cash cow broadcasting business, but our broadcasting business is quite different than, say, a Beasley, which you just saw before me, or an iHeart or a Cumulus, because they're primarily in the top 50 markets. The majority of their revenue is coming from the top 50 markets, where we have no revenue in the top 50 markets. So hopefully that gives you a good perspective on what we're trying to do at the company and what we've been doing. So just a quick snapshot. This is 2021 numbers. We're going to be reporting Q1 results on May 10th. So can't say anything about those yet, but I can say we're very eager to report our Q1 earnings. Last year, you could see we just under $420 million in revenue, $105 million in a profit, adjusted EBITDA. It was actually the best year in the company's history in terms of profit, even though we were still challenged with COVID and supply chain issues. As I just noted, one of the most important things and a real differentiator for us is that roughly half of our revenue and half of our profits are driven by our digital products. So you can see that $199 million up there is roughly, it's 48% of our total revenue. You'll see another important point is through our 322 local radio stations, we're the third largest operator of radio stations in the U.S., we reach 11 million people a month who tune into our radio stations consistently, and that's been stable for many years. Yet we reach 61 million, so more than 5x the number of people who listen to our radio stations come to one of our owned and operated web properties. So we have a significant web presence, web audience that we're able to monetize quite well, and you'll see that in our digital advertising segment. Another important point to recognize is we have a digital marketing solutions business. So we're getting a recurring revenue stream, a subscription revenue stream from SMBs for digital marketing, and I'll go into that as well. What digital marketing meaning? We build their website, host their website, do reputation management, directory listings, and all of that. That subscription business is 20% of our total revenue and almost 25% of our total profit. And that, particularly during COVID, helped us quite a bit. When advertising got impacted, our digital marketing solutions business actually grew double digits throughout COVID. So hopefully this is a quick intro, if you're not familiar with Townsquare, just to size it up. In terms of the transformation, I'll just go through these quickly because in my view, a lot of times the revenue and profit follows the audience and what we're able to do in terms of the connections to consumers. So if you think about when the company was started in 2010, we had 60 radio stations. Today we have 322. We just announced an acquisition of Cherry Creek, which will close hopefully this summer, and that's not included in here. As I just mentioned, today we have 60 million unique visitors coming to our owned and operated web properties each and every month. That was 1 million 10 years ago. We had no social platform. Today we have 40 million social followers. We have 3.5 billion YouTube views. We're one of the largest multi-channel providers of content in YouTube. We can sell into our own inventory there. And 10 years ago, we were 100% broadcast revenue, and today we're roughly 50% digital revenue and 50% digital profit. Yet, from an investor standpoint, we're still being valued as a pure play radio company. And I'll talk a little bit about that. And we've built successfully from the ground up our digital marketing solutions subscription business utilizing our engineering and products team. So as I said, we started as a pure play broadcaster with the strategy and vision of becoming a digital first company. And I think as you go through this presentation, you'll see throughout the last couple of years, we in essence became a digital first company. We still love our radio business, and that's why we just acquired Cherry Creek, but our growth engine is digital. And we use one ecosystem between broadcast and digital to really propel our growth in digital. They go hand in hand. They're really not operated separately to a large degree. So as I mentioned, roughly half of our revenue is digital, just under $200 million in 2021, and half of our revenue is in broadcast, $216 million last year. Within digital, there's two components. There's a digital marketing subscriptions business, which was roughly $82 million of subscription revenue last year at a 30% margin, and then our digital advertising business, which is composed of two components. One is monetizing our owned and operated audience, which I just mentioned was $61 million last year. And then the second component of digital advertising is we are one of the largest digital programmatic desks in the U.S. So we have our own DSP built in-house where we can, in essence, deliver the right message at the right time to any connected device. And again, particularly in markets outside the top 50, we have a competitive advantage because we are integrated with dozens of exchanges for inventory and provides an outsized advantage for us in these size markets. Starting at the end of last year, so when we reported our 2021 earnings back in March, we resegmented our business. And this really came back from investors giving us feedback saying, if you want to be valued on a sum of the parts multiple based on your digital business, you should really go further and break out your advertising business between broadcast and digital. So back in March, we resegmented our business to be our subscription business, which I'll talk about, our digital advertising business, and our broadcast business, and that's what's on this slide. The key takeaway is, as I mentioned, roughly half of our revenue is digital, half of our revenue broadcast, and half of our profits are digital and half of our profits are from broadcast, which in essence equates to our margins in our digital business are actually slightly higher than our broadcast business, which until we broke that out, most people assumed our digital margins were nil to single digits or low double digits. And you can see on this slide, our total digital margins last year were 30.9% and our broadcast was 30.5%. So I would just call it in line at roughly 30%. As I mentioned, really important point if you really want to understand Townsquare is being focused on these smaller markets. As I mentioned, a lot less content available for these communities from newspapers, even in television. A lot of our markets have no local television stations. So we're in St. Cloud, Minnesota, 90 minutes from Minneapolis, and that's the only television they have to tune into. So when they tune into Minneapolis TV, the content is pretty much irrelevant to those communities. So what we've done is leveraged our digital content creators to create content online, in essence become the local newspaper of the past in an online perspective. As I mentioned earlier, there's clearly competition in every one of these markets, but there's not a lot of sophistication and national scale for digital advertising on the programmatic side, and really very few digital marketing solutions for building websites, hosting websites, reputation management, and those things. Most of those services in these local markets are done by a digital agency or a self-serve platform. So clearly, you probably know this, I would hope, that roughly of every dollar spent, 6 cents goes to broadcast radio, and that's been consistent for the last couple decades. Today, in 2021, roughly 60% of all local media spend goes to digital advertising. S&P Magna, which is the data I'm sharing here, predicts that by 2025, in essence in 36 months, digital advertising will capture 75% of all local advertising spend. So clearly to be well positioned in digital is really important if you're looking for future growth in the advertising and programmatic space. We've done quite well in this space over the last decade. So here's a quick snapshot from 2016. We were at $88 million, and last year digital revenue grew from $88 million back 5 years ago to just under $200 million. We just announced in March that we predict at a minimum we'll have $275 million of digital revenue in 2024. So you could see that CAGR. This is how we stack up against the rest of the industry. Just to give you a quick sense, Lee Enterprises will be here later. They're obviously focused in the newspaper space. They're closest to us in terms of percentage of digital revenue to total revenue. We're at 48%. You could see Lee at 34, iHeart at 23, Cumulus at 14. So again, a real focus for the last 11 years on digital revenue. We love broadcast, but it's a stable cash cow business, and our growth is going to continue to come from digital. Key couple things I'll touch on. This is our subscription business. So SMBs in our markets as well as outside of our markets. So this is one of our products that we have a dual sales channel. So we are utilizing all of our salespeople in our local markets. We're in 67 local markets today. And we also have an inside sales call center in Charlotte. We have over 200 salespeople based in Charlotte as part of a 700-person organization in Charlotte. It's our largest office. And almost 60% of our subscribers are outside of our local market footprint, which they're coming from this inside sales team. So roughly 60% of our subscribers are being driven by an inside sales team, and then 40% are from our local sales team. You could see the phenomenal growth. In essence, consistently $10 million minimum in top line growth and $3 million plus in profit growth each year. So this will go from 82 million to north of 90 million this year, probably close to 94, 95 million in revenue at a 30% margin. Very little competition again. Grew throughout COVID. If you're an SMB, the last thing you're going to turn off is your website. It's your online storefront. It matters so much. And one of the key value propositions we're driving here is we're driving organic search traffic. So I go to a plumber in Lubbock and say, what is a customer worth for you? An incremental customer a year, how much value is that to you? And they'll say $900 in Lubbock if I could get one new customer a month. Well, on average, I'm charging $300 a month for this service. You're getting a website, you're getting reputation management, directory listings, all of these things. And in addition, I'm driving you incremental customers every month that I can demonstrate to you via Google Analytics and other technology that we provide. So if I can drive you 10 new customers a month, that's $9,000 of value annually a year, and you're paying me $300 a month. That gives you a nutshell of why this business is doing so well. Competition here is either self-serve like Square, Wix, GoDaddy, or a digital agency that charges $10,000 upfront minimum and a lot more money ongoing. So for as little as $300 a month for an SMB, this is tremendous value. Again, subscription recurring on their credit card each and every month. The total addressable market here is focusing on markets outside the top 50. Again, all of these subscribers, just like our strategies, focus on markets outside the top 50. If you do that, there's 28 million businesses in the U.S. Outside the top 50 markets, there's 12 million. Doing this for 10 years, we know that the best customers for us have less than 5 million in revenue and less than 20 employees. You get to roughly an addressable market of 8.8 million SMBs, and we're at under 30,000 today. So we just announced last year we're opening a second location that will mimic our Charlotte location on the West Coast in Q2 of this year to really accelerate the growth here. Clearly, we're happy with how this has performed, but given the market opportunity, we want to double down and invest more. So this is our subscription business. This is the business that did 82 million in revenue last year at a 30% margin and consistently growing double digits each and every year for the last since it started in 2014. The second component of our digital strategy and our digital products is digital advertising. This did $117 million for us last year, again, operating at a 30% margin. This part of our business is the fastest growing part of the company. It comprises of two components. Monetizing our owned and operated audience, which as I mentioned earlier is growing very strongly in terms of numbers as well as engagement. That was the 61 million people coming to our websites and mobile apps every month. And that allows us to collect first-party data, which is highlighted on the bottom of the screen. So in a cookieless world and everything that is being talked about in terms of cookies going away and tracking, being a large-scale publisher and collecting first-party data is incredibly valuable to be able to deliver the right message to the right consumer at the right time. That's what being a large-scale publisher and also having a programmatic arm allows to us. So the second component of digital advertising is programmatic. So if you're familiar with the trading desk, they're a partner of ours because they have no salespeople in markets outside the top 50. We partner with Trade Desk, Simplify, Xandr, literally dozens and dozens of trading desks. So we're buying media in real time for our customers and be able to provide a really great ROI for them. And that is the other component of our digital advertising. So that's the fastest part of our business, and that's because in the U.S. today, digital programmatic advertising is the fastest growing advertising in the U.S. In our markets, again, very little competition. Digital agency will sign up for Google Display Network. There's no cost barrier entry, very little inventory, very little targeting. So we're able to do this through connected TVs, social, so forth and so on. So this, again, is a really good, robust part of our company, the fastest growing part of our company next to Townsquare Interactive. The third component of our company, so we've got the digital marketing solutions, which I just described, our digital advertising, and then broadcast. As I mentioned, our broadcast business, again, all outside the top 50 markets. Our audience is stable in terms of size. Our time spent listening is stable, which is very different than being in the top 50 markets. If you're familiar with broadcast radio, the great news is the total audience has been stable for decades. More people listen to AM/FM radio today than even 20 years ago. The challenge for most broadcasters is time spent listening is declining quite a bit over the last 5 years. For us, being in these size markets outside the top 50, our audience is stable and our time spent listening is stable, which is in essence the opposite of the industry. So that allows us for our revenue to be relatively stable here. So it's clearly growing post-COVID, and we feel good as it'll continue to grow mid-single digits this year into 2022. I touched on this already in terms of the revenue growth. We had the best profit year ever last year at $105 million. I'll just give you a quick snapshot in terms of what we shared in terms of our 2022 guidance. So last year we had 418 in revenue. This year we said we'd do 460 to 475 million. And adjusted EBITDA last year was 105, and we said we'd do 115 to 120 this year, which will obviously be the best year ever for us. So with that, I appreciate you taking the time this morning. Happy to answer any questions if there's time for